365, we're back. Shake my hand. I just want to do a quick introduction to the video you're about to watch. It's actually it's like a clip from one of my live classes, right? And in this video, the students in this particular video have just about to complete my module 1. So module 1, remember, is the rule-based module. All the rules about the different types of supplies and demands, the different types of areas of values, answering the questions, which order blocks work, why they don't work, when they don't work, when they should work, the ideas of confluence. It's like module 1 is strictly rules. It's almost like, let's say you're trying to get your driver's license. Those of you who can drive, right? You remember that before you go for the actual testing to reverse without hitting the drums, you do this crazy theory exam. And that's what module 1 is. It's like the K53 of trading, right? Basically the theory-based approach of SMD, right? So these guys are just about to finish module 1, and then we start to finally talk about lot sizing, leveraging, and growing small accounts. So, the title of this video is The Power of 0.01, because all your fake gurus, all these, social media traders who use demo accounts to lure people, always look down upon process, right? They tell you stuff like you can never be rich by using 0.01. And that is a terrible mindset to begin with, right? The only best way to trade is to trade according to process as per your capital. If your capital is small, then you must use a small lot size. It's simple logic. It is the oldest trading hack in the world. So in this video, I show these, the students who were there during those live classes, how you can actually grow a small account. Like $100 account is what I consider small, with a very good broker. And yes, of course, starting off with 0.01, but actually what the power of that yields, how many trades, how many chances you can take, the margin of error, right? How many mistakes you can make but still become profitable. So I hope you do enjoy the video. I hope you like it. I hope you subscribe if you're watching on a platform that requires subscriptions. And let me know, give me your thoughts on your journey so far in trading. Just hit the comments down below. I promise to hit you up and I'll get back at you. But this is it. Traders need process. Right? Anyone who tells you something any different is lying to you, is selling you a dream. Real traders need process. And so what you need to do is get process, learn the rules of the process, become systematic with the process, and then test the process, right? You grow your account, right? So this is literally, by the way, how I run my classes, right? So all my classes are in a similar format, whiteboard, charts, live trading with students, etc., etc. All right, enjoyed. 365. Shake my hand. Peace.
Hey, account growth. You want to grow your account. If you're a small account holder, you want to grow your account. You don't want to become a millionaire. Small accounts can never become a millionaire, but you want to grow your account. Growing your account opens the door to becoming a millionaire if that's your ambition in life. Why? You first grow a small account into a sizable account. The sizable account, and normally we talk 10K in the academy. A $10,000 account is the account that will ride you right into the gates of pearly heaven, whatever your wealth setup is, whatever riches look like to you. But here's the key. This is what I care about. Between $200, ladies and gentlemen, this is Lee. This is where I'm excited. The journey, the following my rules, the meditation on this plan. This is it. This is all I care about, because in here, and you'll see when I do money talk with you guys, there's going to be a time in module 2 in which we discuss what we call money talk, but I'll post a version of money talk very soon on social media. This is what I call a trader's process. This is when you stop being you. This is when Leroy dies. Leroy is no longer trading. I always say there is Leroy in the market, and Leroy hasn't been able to show up for work for the last 2 days because he wasn't feeling well. And then there's the trader who is simply always ready. But the trader is always ready because the trader is on autopilot. During your journey of growing your small account, and a small account in this example is anything between $100, right? Because most respectable brokers who start off with the $100. Those brokers that ask you to put in whatever you want, $20 and get a bonus, please run away from them. You'll incur problems. A small account for us is anything under $1,000. Anything under $1,000, that's a small account, all right? Simple as all that. So your distance between 1,000 a 3 to 4 figure account into a 5-figure account. That's your trader's process. The journey is going to be up and down. It's like a simple up and down until you learn to conquer yourself. You guys have got a shortcut because you're part of the academy now. But this process must lead to this, right? When you get here, you'll have learned a lot about yourself, blah, blah, blah. We can talk about that in the program later on. But this is it, guys. You don't want to be a millionaire. If you came here to become a millionaire, but this is where you're playing, change that immediately. You want account gain, percentage gain. This is it. This is all we care about. Percentage gain is measured in cluster trading, cluster trade. This doesn't mean you must go fire off in the markets now and take 10, 15 trades. No, every single cluster trade, every single trade in the cluster must be rule-based. Remember, in our mentorship program, guys, I am going to ask you to send me your broker accounts. I will ask you for that. And it's not because I wanna see your personal life. No, it's up to you. If you want to grow, I have to see it. I can't, there's a level of mentorship that stops where it's like, okay, I can just teach you what I know, but I need to get to know you as a person. But when we go through your statement and we catch these mistakes earlier on, we can start to see which rules you're overlooking. It's easier that way. Because I can say, but look, you see what Samuel did. It's like, dude, why are you selling so close to a turning point and there's a demand there? I don't understand this sell. Why on earth are you doing that? That's what rule-based trading will do. Because then the answer is, I can't be surprised that prices rally in the opposite way as we speak, right? Because you literally took a sell very close to a demand, and we know what that does. That's the attention to detail small accounts require, right? You can't mess up. You only got $200 US. I can tell you now, with my risk reward ratio of 1:3 and my risk per trade being 5% or 0.01 for every $100 US, I can tell you right now, $100 US can give you 18 trades. Oh my God, guys, this class is going in its own direction. Can I just break this down for 2 seconds? I can take 18 trades on $100 US. Why? Because $100 US at 0.01, roughly speaking, amounts to 5%, and that math actually, if you think about it, amounts to $5 per trade. So $5. So I'm looking for areas of value that will allow me to risk $5, right? Areas of value that will allow me to risk $5. Break it down, sir. All right, cool. Thank you. Yeah, all right, cool. Let me rock, man, because for some reason I'm here. And if I'm here, I might as well just finish it. So far, I'm hoping you guys are with me. Can I get a temperature check in the Zoom room? If I've got $100 US and I'm moving at 0.01, right? If I've got $100 US, I'm moving at 0.01. That's 5%, right? Because that's our rules. And 5% of $100 is $5 US. So let's say you see a cell set up there, and that's the area of value. You're going to have to check the pip size, right? You're going to have to check the pip count, right? Because that area of value can't be larger, can't be too large. So normally, even in my signals, I won't give you guys something that's too big, something that's over 100 pips. Because at 0.01, 100 pips is roughly about $9 to $11. Just depends on the asset, right? So already you should be doing the maths, man. It's your trading. It's not complicated math, but you gotta be good with your numbers. This is your business. No one does inventory horribly like traders do. No one else at Pick and Pay will buy bread for 50 Rand and then go to the marketplace and sell that bread they bought for 50 Rand for 20 Rand or $20, $50 for $20. No one does that except for traders. That stuff has to stop. If you buy something for $50, you got to try and sell it for 100. How are you going to make a profit? But you got to know your cost of business, right? There's some chats there in the Zoom chat. All ears. All right, we're together. D, thank you. All right, fantastic. Joy says yes. All right, cool. So let's do this. I promise you I will end module 1 tonight. It's not going to take long. Right, so my area of value is auto. I spent 3 weeks teaching you areas of value. My area of value is my business operandi. It's my place of work. My areas of value are our offices. That's where we check our stop loss placement. That's where we qualify stuff. Qualify the imbalance, all those rules that we've been doing for the last 4 weeks together, that place is our business center. So with $100 US, I know with my skill set, with what I've empowered you up until today, which is the end of module 1, you now know the 5 types of supply and demand. You need to go test them. You need to see, all right, cool. I only got $100. Maybe you got 200. We can do the maths for both. It doesn't matter. It's the same result, right? 200 US dollars. This will be easier now later on when we're doing money talks. I don't want to over break this thing down, right? But I will post a money talk video so you can just watch that and see what's coming your way, and then for you to be a recap when we do it, right? So $100, whatever. But for $100, 0.015%, which means there are $25. There are 25 US dollars in 100 US dollars, right? Do you understand? 5 times 20 is 100. I don't know how else to explain it. Which means, technically speaking, if I perfectly look for 20 trades that would give me 5% risk on 100 US dollars, 100 US dollars should be able to give me 20 trades. So I like to say 18 because some areas of value might be 60 pips, 90 pips, and then all of a sudden, sometimes you're risking 5%, sometimes you have to stretch it a bit and risk 6%. But $100 at bare minimum should give you 18 trades. Okay, this is getting interesting because there are over 600 charts to trade on any broker, right? Or in the markets. IG markets alone, 17,000 markets to trade. And you, with 100 US dollars, you just need to find the perfect 18 for you, right? So module 2 from tomorrow, when we're breaking the stuff down, when I'm giving you my trader's edge, there you now know what Leroy is specifically zoning into. Now that he knows the 5 types of supply and demand, there's specific stuff I quickly, just penetrate towards in the market. But let's work with this maths real quick. Now, I keep telling you guys once again, trading clusters. That's rule number 1. That's the trading psychology hack. A lot of people shut down. Trade 1 goes wrong. Trade 2 goes wrong. Kaput, they withdraw, they're out. Or kaput, they start playing the lotto, right? They start over risking, trying to revenge trade. Judge yourself after a cluster. Take 20 rule-based trades. Follow the rules as strictly as possible 20 times in a row, and then tell me what kind of a trader you are. You will see a big difference. If you want, I always tell you, there's a guy called Ronald in our group. He introduced something called the live demo trade. A live demo trade is a real account with money you're willing to lose, right? So like 100 US dollars to 200 US dollars, and he just played with the rules. He experimented, and he made like 500 US dollars in like, I can't really remember, it was like in 3 days or 4 days, and then he lost it after that. But he came back to the group with such a powerful, informative reflection, right? Like, look guys, this is the direction, this guy, the rules do work. This is where I started blowing the account. This is how I blew it. This is why I blew it, right? I started to break this rule, and the markets got me back. I made so much money because it's as simple as that. But again, back to here. Now, if I say risk to reward ratio, R&R of 3:1, and remember, we are cluster trading, rule-based trades, 3:1. What this means is, even though I've found my area of value and it's at 5% or whatever, my take profit, oh God, this is so good. My take profit target, where I want to get out, where I want to take profits in the market, the minimum. And guys, I live by this, right? Sometimes on the signals, just to keep that group active, I might break it and give you guys 3:1. But for my corporate trades, for my personal accounts, I'm telling you right now, it is such an awesome. Remember, I've empowered you with MTA. That's what we did last week before I fell sick. Multiple time from analysis, which means you can keep dialing down to get a better R&R. All right, some of the trades we take, the risk to reward ratio is 1:16, 1:20, right? Euro CAD, Euro AUD was 1:16, 1:25. It's something ridiculous like that. These question entries on the 1 hour time frame mean your stop loss is all the way down there, all the way up there. They actually multiply your risk to reward factor, and that's good. You want that in the market. The simplest way to explain risk to reward is, if I'm spending $1 of my money If I'm spending $1 of my money, I want to make $3 back from the market. If I'm going to risk $1, I want $3. Simple as that. And we are risking 5%. Don't forget this. We are risking 5%, which we've agreed mathematically is $5 on $100, right? Remember, I'm not saying start off with $100. This is not a recommendation for me. This is just to help us do simple maths, right? The more you start off with, the better. Only if you know what you're doing. You can start off with 10,000 and lose all of it, right? You always lose to the better trader. Maybe you'll be buying while I'm selling and you're losing your money to the person who you paid to teach you how to trade, right? It's just how it works. So make sure you're going into the markets with a clear mind, because you guys are done with module 1. So I can feel your fingers are now itching to trade. You want to get in, you want to go test this knowledge, and I understand that. But let's break this stuff down. So for every $5, which is 5%, you're already risking 5%, which is $5 in this example. You want to make 3:1, which means you want to make $15 in the markets for every trade. If you're going to risk $5, so you can imagine if I'm risking $100, I want to make 300. If I'm risking 1,000, I want to make 3,000. This is the minimum. How do you judge that? How do you calculate that, Leroy? It's simple. Where's your take profit? If your take profit has to be there. Your take profit has to be the distance, right? 3 times away the size of your area of value. I'll make that again. So this is the size of my area of value. My area of value, stop loss plus entry point. You saw the last PDF I sent you on Sunday, summarizing everything now for module 1, the last week, and today's class. I just put it all in there. I introduced these terms to you in that PDF, right? And you've got questions about the PDF I sent on Sunday. Now is your chance. Please drop them on the Zoom chat, right? And I started to teach you guys the technical terms, right? Proximal and distal lines, proximal and distal lines. Remember that, please. We don't talk about stop loss here. Distal lines and proximal lines, right? So the value, the measure of pips between the distal and the proximal, your stop loss and your entry point, that distance is in pips. You need 3 times that distance minimum. That is your first take profit target. But it's not because you've decided that you're going to sell here and the distance between your supply and your demand is 3:1, so you're going to take profit here, that you take the trade. You also are aware of the 5 types of supply and demand. So you're also constantly looking left. Is that possible? Will price drop freely like that? That's why I say to Samuel, hey, when I'm looking at pound JPY, man, look at the mayoral time frame. There's nothing there. There is nothing stopping me. I know on the daily we're at a pause. I know on the daily there's a turn. But when I look at the bigger picture, there's nothing. There is nothing in the way to stop me from accumulating all those pips. Because of that, I'm keen for it, right? But what if there was a massive demand here, right? That means when price comes here and here's this massive demand, supply and demand, price will leave a supply to demand, and if it gets there, it will turn, right? Price will then have to turn. Price will have a rise to the demand, and it's just turning, which means your risk to reward ratio, even though you sold here and you're taking profits there, and to you it's 3:1, and you ignored the demand on the left or supply, whatever it is, which is now making price turn against you. First of all, you're now down to 2:1, number one. Number two, price no longer even going back to your direction. You're going to break even or get stopped out. That means there's still a problem with the analysis side of the trader, right? So because you can't take profit down there and ignore the fact that price is going to turn here first. So last week again, when I was drilling that concept, always focus on the immediate areas of value, immediate sell, immediate demand, and that would be the deciding factor whether you take the trade or not. So I can tell you now, for the first 3 months of your trading, you guys here, you guys that we're now releasing into the world as institutional traders, you get a setup like this, and it's beautiful, and you can understand it, and you can read it. You can take the trade if you want. It's up to you. But if this trade doesn't offer you 3:1, I just want you to know I am judging you, right? You are not doing good business, right? There's nothing wrong. I know my senior traders say this rule is too strict. They've actually said, some of them will have made the senior trader program Months earlier, had I allowed them to take 1:2, or 3:1, or sorry, yeah, 2:1, risk to reward ratio of 2:1. And I completely agree. I'm here to teach you guys purely how I trade, right? I'm not saying any other risk to reward ratio as a minimum is wrong. No. Some people trade 1:1. Some people like risking $1 for $1. It makes no sense to me, but I do it. Some people risk $1 for $2. That's a double, in fact. That's fine. I like 1:3, especially for new traders. Why? You can make a mistake. Let me show you what those mistakes will look like. Let's say you stuff up here, right? Let me show you why this is so. I think this is predominantly so important for account growth. I can't even remember how we got here. I think it was Dee's question around smaller time frames. To be honest with you, how do we treat AOVs outside the areas of value outside your MTA process, D? As long as they're confluent, right, with governing structures, governor, weekly, and because price won't always sit neatly in the golden thread. But what you want is confluence in direction, right? So price must be following that higher power direction, because if it's not doing that, then you're going to have problems. But it is nicer. You get more confidence when you take trades that are confluent with MTA. Sometimes when I do take trades that are outside my MTA process, those will be my 3% trades, right? So my 3% and not my 5%. You see, I'm sure you've seen me do that a couple of times in the private group on social media, where I go, look, man, I'm going to go 3%. It's a C-class trade. It's following the direction of the governor, but it's not inside the protection of the governor and the mayoral time frame, right? Because at some point those drops get lower and lower, or those values get higher and higher, either way. Right, real quick, guys, as we wrap this up, so I can get into the business of the day, which likely now we still have about 45 minutes to kick it, so we still have time. Let this become practical now. You got $100 in your account. Again, not a recommendation, right? This is not a recommendation. It's just for simple mathematics. Let's say you take 10 trades. And I'm sure you've seen me do this a couple of times. If not, here you are. 5 of those trades are wins. 5 of those trades are losses. Right? So maybe you took a Signal financial plan, which is one of its kind, not anywhere in the markets, and some guy gave you 23 signals, and the first 10 have gone off. The first 10 of those signals have gone off, and now you're starting to wonder what's wrong with this guy. I've only won 5 trades, and I've also won or lost 5 trades. Or maybe this is actually out of your own analysis, which is better, because you should have followed your own rules and done this, etc. And one of the rules you're abiding with is this one of 3:1 risk to reward ratio. So I just want to do proper maths together here. 10 trades, 3:1 risk to reward ratio. Right. So let's talk about the losses real quick. So you've got 5 losses. So just real quick, $100, right? But then each trade was worth about $5, because you are risking 5%, right? So $5 times 5. 5 what? 5 trades. $5 times 5 trades equals $25 lost, right? So let's say the losses happened first. So you took 5 consecutive losses in the market. By now, you probably need a therapist, right? And you probably think your ex-girlfriend is bewitched you, your ex-boyfriend bewitched you. I don't know, but this is what's going on here. You got $100, you now got $25, which means you wake up and your account balance the following week is $75. You're in a panic. You pick up the phone. I hardly ever answer my phone. I don't like phone calls. But let's say I answer the phone and you're panicking. You're like, Leroy, I've lost $5, blah, 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 blah. Right? My account is there. And all I'm going to say to you is follow the rules, follow the plan. Everything just averages itself out. There were 5 times in the markets where other traders were better than you. Go back to the drawing board, follow the rules, follow the plan. And then your next 5 trades are wins. This is what's going to happen. Your account balance is now $75. You need to know this. This is very important, right? So it's week 2 now. Now check this out. Now we're going to go back to our concept of risk to reward ratio, the one that we use in the academy, right? The one that I've been teaching you guys about, and nothing has changed. All the rules are going to be the same. You're going to do your best the following week. You're going to open yourself to the idea of abundance. You're going to tell yourself that there is no restriction on the supply of finance. You're going to give yourself positive affirmations. You're going to fix your mind as a trader, not get emotional, follow the rules. But every time you lost a trade here, real quick, you lost $5. Why? 3:1. The $5 is the one, right? It's what you are risking in the market, and you're hoping to make $3 or 3 times that one. But every time you lose the one. So every time you lost $5. But now you're starting to win. And when you win, this is what it looks like. Simple, guys. Can't wait for you to finish Module 2. I actually just can't wait for you guys to get back to the markets and start trading and say, look, finish the course, now we're trading. And Module 2 is quite short. It's not as long as Module 1. Right, so there it is now. Now you're winning. Well, what's the rule again? If you're winning, obviously you've chosen a setup that allows you to get 3:1 minimum. I literally got out of a 1:16, right? And it's from the first trading plan in March that I gave you guys, that I put on the public group, that had 0 losses. One of those trades was a 1:16 risk to reward ratio, right? Based on my entry point and my take profit. But I'm just talking to you guys here about a simple 3:1. 3:1. Now you win. So which means every time you risk another $5 of your $75 left in the market, and you took 5 trades, how much did you make? $15. True or false? Somebody, quick maths. Quick maths. And the traders are awake. My worst fear is that I'm teaching and people are just watching Netflix. Someone there is on the Zoom chat. Just let me talk about Netflix. Yeah, okay, cool. Right. So you got 5 trades. You're gonna win 5 trades, but every time you win, at a minimum, you're making $15. How much is that? Simple. $75 back in your pocket again after 5 trades. But it's the end of week 2 of trading. Week 1, this is what happened to you. But you changed nothing in week 1 when you took a loss. You did not change academies. You didn't change trading instructors. You didn't change trading strategies. You didn't run back to your silly indicators. You reminded yourself, you paid this man $210 to do his course. That's a lot of money for you. So you're going to listen to him up until you can provide him with the data to prove that his 8 years of experience in the market is wrong. Until then, you stick to the rules. Here's week 2 now. Week 2, risk to reward ratio is what saved you. It's not because you took 5 trades and they were correct that saved you. It's because you were choosing trades that offered you a minimum. Now you got $75 back. What's your account balance at the end of the week, right? That's the most important thing. So when I say percentage gain, capital gain, this is what I'm referring to, because at the end of week 2, your account is now back to $150, which means you've got a profit. You can take this to the bank and say, I can hold profits. I can actually grow money. You had $100. You sustained losses. You took 5 trades. Week 2 came back and you're now on 150. Guys, you can apply this example across the board. And I'm gonna end it here so we don't run out of too much time tonight. Before my throat gives in. Okay, still here. Okay, everyone is still here. All right. Now, guys, maybe there's a nice move on Netflix. I don't know. Right. Good. Right. But does this make sense? Risk to reward ratio. Risk to reward ratio is how I grew most of my first accounts. It was, guys, I want you to know trading is hard when you do it. Nothing I'm teaching you is hard. It's just new. But trading can be very difficult. I lost for 3 years. 3 years. I'm not talking about losing money and blowing accounts. I'm talking about because of my direct passion in forex, I lost everything, right? Up until I got to a place where I realized trying everything, moving in circles wasn't good for me. This is very much in part of my rules. There are 5 types of supply and demands, which you now know at the end of module 1. And I'm saying in module 2 from tomorrow, when we talk about them and start to unpack the 2 outside of this 5, the 2 that are for my trader's edge. The ones, see, module 2, we don't care about what other retail traders are doing. If anyone is only part of 365 Trading Academy, we are not focused on how they are moving in the markets, because we're not competing with retail traders. Module 2 opens you up to the banks now and says, this is all you need to focus on. You're competing with other institutional supply and demand traders, and module 2 teaches you how, but it's based on this foundation. This is it. Every single trade we take, this is the minimum requirement. If you do this, you'll trade less, but the trades that you take will give you percentage gain. This account, and you'll see with the video I'll upload, $150 US, $100 US, and me, I'm very realistic. I don't tell people they're going to be millionaires overnight, but you'll be very shocked at how much consistency, what you'll be looking at in 3 months' time. I wish I had that spreadsheet here closely enough, and I could tell you the exact amount. Okay, unfortunately, you just look out for the money talk video I'll post tomorrow. The whole spreadsheet is far away, right? But we're looking at 6 months, serious numbers. I don't want to say them out loud, then people just get excited, then go blow accounts, right? But it's a process. Money is always given to the disciplined trader. Stick to these rules, you'll be golden. Right, ladies and gentlemen, let us talk about what we need to talk about tonight. And once again, before we do that, I just want to give you guys a final chance. Were there any questions from the PDF that I did send you guys on Sunday? Once again, thank you for allowing me to send it a little bit late. I only started working on it on Sunday. To be honest with you, I was, and it was, I don't even remember proofreading it, but I think it was fine. Any questions? Going once, going twice. So in there, I'm sure you saw I put in everything. I wrapped up complicated 365. I wrapped up Talitha areas. I wrapped up drawing your levels accurate, because I'm tying things together. Because to really talk about how to draw levels, so we can get to that multiple time frame analysis type of situation, distal, proximal line, your entry point, how to find them, the goal, that's the trade generation idea, MTA, monthly, weekly, daily, H4, very, very important stuff. And then the last part of that PDF is all I want to talk to you guys about tonight. And then we can, first of all, end the class, but more importantly, end the chapter on module 1. End the chapter on module 1. Then from tomorrow up until Thursday, if you guys are excited and you actually, look, man, if you feel like, look, Leroy, we missed class on Monday. I am free this Friday. We have no golf this Friday. My boy's back at school anyway, so my mornings are now tied up. So if you guys want a class Friday night, I'm happy to give you a class, right? It's up to you. You guys have to decide, probably decide in one of the Zoom chats during